Good morning. It's July 14th. It's Friday. Enjoy the long weekend here. It's not a long weekend. Good morning. It's July 14th. We're on a Friday, headed into a weekend. I know everyone's excited about that, but be prepared. Let's head over to the Longbow dashboard for a few things that you should be aware of. So here I'm starting on the Doomsday Dozen. We noted this week that we were at 100. We're still at 100. And guess what happens? It usually hangs out for a couple days, few days here at 100, and then the market tends to decline. And so guess we're back at that level. So be careful here. People are in an extremely greedy position. Obviously, the banks reported today, but it was kind of just an okay beats on reasonable expectations. Obviously, JP Morgan got a great deal on its First Republic purchase. That's no surprise, but be cautious heading into earnings season. I want to go over to my general tab, just taking a look at some of the things that you should be aware of. SPY nearly overbought. We've got minus 3.4 odds to the downside to 1. The Qs are overbought, makes sense today, but this isn't the time to short. You can see it's a really low signal strength, and you have a bullish short-term, bullish medium-term, similar with the S&P. So this isn't something you're really going to be betting against, and you're still seeing an implied volatility premium. So people have some protection on this. So the Qs could run up even a little bit more, but we're noting here we're getting to that level of overbought on the technical front. And if we look at it, usually what happens is that you hit the top and it comes down a bit. You hit the top. So it could still be going up from tax sensitive accounts. You might want to hold on until some of the momentum indicators break down. But in terms of a short-term trade, if you've been putting those on, this is typically when we see some sort of pullback after this point. We've got Russell, middle of the range, EFA nearing the top end of the range, minus 5.5 odds to 1 to the downside. But it is trading at a discount, so people are pretty complacent on it. You don't want to be in a neutral signal. You don't want to be hanging out here too long if you are a short-term trader. ACWI, again, heading to the top end of its range. Because the U.S. is such a big part of the all-world index, you're having bullish instead of here. It's developed markets without the U.S. So that just tells you how much the U.S. is really driving global growth and global markets. And gold, it's pulled back a little bit. It's near the top end of the range. Dollar has bumped up from, remember, the bottom end of the range. So when we're looking at that, you can see how helpful these signals are. You can get to the bottom of the range and it pulls up a little bit here when we hit it here. And so, now you've got 7-1 odds to the upside on that. So again, if you're trading the dollar, be careful on that. And as you know, these are all connected here. We went through this week. The inverse correlation of dollar, gold, emerging market bonds, and thinking through that. So that's your setup into the weekend. And if you're thinking about protection, we'll probably talk a little bit more this week. What do you do? How do you think about trimming position sizes? How do you think about hedging? Obviously, it really depends on your objectives, return objectives, risk objectives, sizing of positions, the conviction you have in the names. But we can walk through some of those strategies next week with you to talk maybe one by one a little bit about what you could think about before executing them. That's it for today. Heading into the long weekend here of summer because everyone's enjoying it. Take care.
All righty.
All right. How are you doing?
I'm all right.
Tired?
Yeah, a little bit.
Me too.
Yeah. So I'll see you Monday.
Bye.
See you guys.